in Maine, which is even cooler. Good morning, Eric. Hope you're doing well. I am not going to any games this weekend. I traded my tickets in for tonight. I am going to Hawaiian Shirt Night instead on July 8th when the Orioles play the Mets. Good morning, Windjam, John, Cindy, Judd. Got a lot of people in today. Good to see everybody. Well, your top performer after all of this news is Oats. Sure. Why not? Hey, what's going on with Oatly? Oh, it's gone up since I recommended it. Cool. 20% move. All right. We're going to dig into a couple of things. Obviously, the big news is the trade deal. And the reaction has been relatively insane, right? So we'll do our quick checklist and we're going to talk about momentum. And then we're going to talk to Professor Jeffrey Bierman, and he is going to be very upset about algorithms and how dumb portfolio managers are, but we're going to talk about momentum and a lot of other things and why, it's very, very important to be paying very close attention to, algo patterns, momentum driven trades, because once again, in this environment, it's all there. You've just seen this market behave the way it has over the last 45 to 75 days. It really tells you that you as a retail trader really need to just pay attention to where the money is flowing and could just go with it, right? Today, strength, AI, RDW, Royal Caribbean, all the momentum stocks are back in focus. This could easily be a sell the news event, but the strength in this market is obviously a much different environment than where we were 60 days ago. And it's just a reminder when it comes to this market, when optimism there, JP Morgan came out with a new six-factor model that said that there is now a 96% chance over the next 6 months that the markets are up. I don't know where you get a six-factor model, but why not? This is pure momentum. RCL, CCL, all those names, these are just companies that when they are over their 20-day moving average, you be bullish. When they are under their 20-day EMA, you be bearish. And you just let the money flow cover you. It's absolutely wild. There is not a lot of weakness in this environment. And I will tell you right now, you better be paying attention to Adobe because Adobe is one of the very few stocks that has been in like consistent breakdown territory for the last 2 weeks after the sell off and after this thing can revert and it can revert hard and not just revert hard. I'm talking back to the 200-day EMA. So Adobe becomes one of the very first stocks to be paying attention to. A little bit of a sell off to start this morning. I want you to be looking at the daily chart and I want you to be looking at the 1 hour chart. If we can get back above this adjusted EMA, your upside, you got about $10 there to play with in the daily side. Above both of these, preparing maybe next week, maybe into the next 2 weeks. We get above here, 395. That spread is going to be great, or just going one directional. And you could start picking around this right now. Even if you're doing spreads back up to these moving averages, it's a very good start. This is one of those names that has just been beaten up. And now, if everything now is back on the table and everything starts to see capital flow back into it, Adobe moves to the top of the list. IPI, I haven't seen Intrepid Potash in so long since the war. I mean, that's how long back we have to go. Well, it's breaking down. It's under pressure. So all of these agricultural trades are now going to be potentially bearish, particularly on the backside of any potential deal. There's going to be an agricultural deal at some point with the U.S. and China as well. Boot, BOOT. What do you do? Who cares, right? Boot Barn, not looking good. Looking for a move maybe down to around that 144 level. On top of that, Adobe, FPI. FPI is always one of those names that pops up on a pretty regular basis. Farmland Partners. You don't really see significant momentum moves in this stock, but this is one of those long-term, get your fingers in the dirt type of trades. I like this for a little bit in the short term, maybe a 12, maybe even a 1250 move, particularly around this news. You just keep your stop right back here at the 20-day moving average. Vital, MGA, Palladium had a great day yesterday. We're seeing a little bit of profit taking this morning. That is largely on the back of the trade start conversation. But then there's one name that really sticks out. And I want to be really quick about this. Hey, Secret Agent Charlie, good to see you. I want to be really quick about this because this is one of those stories that while all of this stuff was happening with trade, while everybody has been distracted by the Iran Israel situation, this stock pops out of nowhere this morning. I did not know much about it. I knew that it existed, but this is pretty interesting. This is Bit Digital. BTBT, $2 stock. CEO steps in and buys $1.5 million in shares after they did a special offering that saw the stock dump yesterday down. We've gone from roughly 270 down to about a buck 95. This seems completely arbitrary, completely out of nowhere, completely random. But then you have to actually start to dig into what the hell is actually going on down in Washington. Oh, that's what this is about. The Genius Act. Now, if you don't know what the Genius Act is, welcome down the brave new world that we are entering. The Genius Act is getting very close to passage. This is going to regulate and legitimize U.S. stablecoins. If you don't know what stablecoins are, you're in very good company with a lot of other people. Right now, USDT, all of these different coins, Tether, which we talked about. Why does Tether own $250 billion in U.S. treasuries? Don't ask questions. It's just another shadow bank on an island with 50 employees. The current stablecoin market's $250 billion, and the Genius Act could 5x this in 5 years. Here is where it gets interesting. Genius Act would mandate issuers of stablecoins to own U.S. treasuries. This is backdoor quasi quantitative easing. Stablecoins become the fintech funding of the United States government's U.S. deficits. This is financial innovation at its finest. And no one knows how the hell to even explain this to people. Let's do that. If you do this, you have completely neutered the Fed. You have less liquidity driven by the Fed and more treasury liquidity driven by the quote unquote innovation of crypto. Would it shock me at this point to find out that the founder of Bitcoin probably was some agent sitting on a desk somewhere in Alexandria, Virginia? This is interesting. The Fed balance sheet could shrink as a result of this. The treasury liquidity is what drives the market. You move from a floor to a corridor interest rate system. I'll explain that later today. And the Fed actually becomes the crisis manager of the financial system, which it already is, but it does not become the thing that we talk about on a day-to-day basis when it comes to interest rates and open market operations and everything that comes with it. Ethereum, this is where it gets important. Ethereum is the backbone for most of the stable coins. They're using this. They take the ETH, they burn it. It's deflationary, ETH. Ethereum gains credibility as collateral in the financial system, the exact same way that short-term T-bills become collateral in the financial system. Ethereum becomes the infrastructure for the fintech money markets, and institutional on-ramps expand Ethereum's role. Well, I'm not saying go in and buy $1 million of this stock. I'm saying that if you have a speculative trading element, bone in your body, long term, willing to throw something down on the table and say, yeah, I'll put down 50, I'll lose 50%, but my upside is blank. This is unique. This is the very first time that any insider has ever bought stock at this company. You have a massive catalyst behind you. And Bit Digital is pivoting from Bitcoin mining to Ethereum staking. They own 27,000 Ethereum. They own 417 Bitcoin. They recently offered 75 million shares to raise money to buy Ethereum. They are spinning off their HPC arm, White Fiber in an IPO, and we had a drop in this stock. Liquidity is strong in this financial system. Crypto is a element of this. The dollar is going to continue to erode slowly. Bitcoin and gold will do well over the long term. They may face a little bit of pressure now. But this little thing, this little BTBT, I've never even really heard much about it, is the story about Ethereum potentially becoming digital infrastructure for our monetary regime. And I have said over and over again, there is a new monetary regime coming. And it may very well be something that most people had not even considered. I wouldn't have thought of it this way. But it makes a lot of sense because at the end of the day, you need somebody to buy all of this debt. And if the people who are buying all of that debt are these stablecoin companies, it buys time. It buys time. So, BTBT on the list, speculative play. If you're not comfortable stepping in and touching this right now, the very simple way to do this is to wait. Be very, very careful. And people say, what do I do right now? What do I do right now? I've got a guy in my ear. He's like, you got to tell me what to do right away. If you don't tell me what to do right away, okay, well, sometimes you can be a little bit patient. Sometimes you can wait just a little bit, and you can trade around this at very specific moving averages, which we educate you on every day, 20-day, 50-day. You can wait for the relative strength index to push back above 50 and wait for the MFI to push back above 50 and wait for the MACD to move positive and get that positive ADX move. But if you must trade it, if you have to trade it today, and that is your lot in life, and you got to do it right away, today, put Bit Digital on your volume weighted average price screen, wait for the market to open, and trade it around the blue line. If you break above that blue line, buy it. And as you can see, there are multiple deviation bands of price, 1 minute average price. The upside on the third band is 220 based on where VWAP was yesterday. Well, if that's the case, that's a 10% move. Pretty simple. All right. You don't have to do something right away, but Gianni likes Ethereum. Gianni was right about the melt up. Gianni was right about the deal. Gianni's bullish on Ethereum. Well, what's the high octane trade? What's the high octane name? Well, this is starting to arrive on the field for us. So keep a very close eye on this. Definitely, trade it based on your risk style. Maybe you are seeing exactly what I'm seeing, which is a CEO of a company that has never bought stock before at 335 yesterday, bought $1.5 million in stock. Direct ownership shares as seen in this filing, Form 4. Put his own money down. Never even heard of this guy, but I know that he is at 31 Hudson Yards, floor 11 in New York, 10001. Pretty good. So that's really the key thing that I wanted to just discuss, that we're going to be having a deeper conversation about the monetary regime and the monetary system and how all of these stable coins are now influencing our financial system. What's wild about this, right? It would massively expand stablecoins, crypto dollar backed by the U.S. government bonds. It creates a backdoor way for the government to fund itself without having to go through the Fed. It is a parallel money system, which is wild, absolutely wild. And on top of that, more importantly, the stablecoin companies have been buying and will be mandated to buy the bonds and to buy treasury bills. So that effectively gives the government the spending they need. It gives them funding to do whatever they really want and buys time. That's all this really is about at the end of the day. How do we buy time and continue to just sit back spend the money that we might not have, the Fed's role is going to shrink if stable coins handle liquidity instead. Trump's already saying that he's looking for a new Fed chair. He may even name somebody before Powell is out the door. And it removes the concept, in my view, that Mr. Bessent would be the Fed chair. It may be somebody with a little bit more experience in the cryptocurrency and in the stablecoin world, which would be mind blowing. On top of this, there's less need for the Fed to print money or run huge programs. The government can spend more while the Fed does less. And here's the real kicker: it basically feels like modern monetary theory through a back door. So what is the market impact? More volatility in short-term rates. Interest rates would be more controlled, more suppressed. The dollar probably would weaken over time, but still would probably beat other currencies because of the buying. This is good for inflation hedges like Bitcoin, gold, and real estate because all signs move toward a more longer-term inflationary monetary inflation world. The government has now found a clever way to fund massive spending without looking like they're printing money, but they're making crypto companies do it by forcing them to buy government debt. It is the private sector money that is actually going to be funding the government. That's pretty wild, but it shows you how all of this thinking operates, how all of this monetary theory shifts over time. And I continue to advise you, don't pay attention to what Jerome Powell says. Pay attention to what everyone else is doing. I'm waiting for Professor Bierman. I don't know if he was coming in at 9 or 9:10, but we'll just keep hanging out and we'll dig into some other things going on in the system. Again, today, the real important thing for you to be doing is to just assess this market. And we've seen a couple of times, a lot of moves recently, where the market will hit that third deviation band. Yesterday, we did not get that. We got a start of the day where we bounced off that at 9:52. Remember, I typically don't touch things before 10 o'clock, but we got a very sharp reversal yesterday at 61.06, and we moved to 61.37 by the end of the day. Why does that matter? Because I don't like to do this in the pre-market in the pre-market first 30 minutes of the day. But as you could see, 608 turned into 612 by the end of the day. Just buying the in-the-money call can be very, very successful. I'm going to look up VAC for you right now. So, Marriott Vacations, $50 million purchase last week by the 10% owner, Asmar Christian, Impactive Capital LLC, Wolf, Lauren Taylor Wolf, $50 million indirect. But what's going on with this name? Well, we have a stock that is showing you that there's less concern about interest rates, less concern about consumer spending. And this is a consumer cyclical stock in an environment where consumer cyclical stocks remain very strong on the back of momentum, capital coming into the market. So the test here is going to be this 200-day EMA. You've had this nice move from 65. You're pushing towards 74. If you own this, and again, it all comes down to how you might trade this or how you might try to focus on where you sit. If you own this already, well, congratulations. And hopefully you bought it back down here at the 20-day moving average, where I basically tell everybody, hey, it's a cyclical stock. It's a momentum-driven stock, but pay very close attention to three things. First, 200-day moving average, right there. You saw that tick above yesterday, trying to break above it. Might not. Here's a couple of important things. You're overbought. You're overbought on your RSI, relative strength index, and you're overbought on your MFI. And when you both get both of them at over their overbought levels, that is a good time to do one of two things. One, maybe take some profits, or secondly, hedge. If you own 100 shares of VAC and you've had a nice little $10 move and now you're overbought on your RSI and your MFI, Sell calls. Sell calls above the 200-day moving average. Short term, doesn't have to go out too far, maybe out to third Friday in July, but make sure it's worth your while in that you want to ensure that you are happy to sell this stock at that specific level. They are very shady companies. But again, so are cruise lines. So are half the names in the NASDAQ. Like Beyond Meat is a public company. That's pretty shady. But as far as understanding, I don't care what they do. I only care about the fact that they have the strength and momentum and that money is coming in to this market. And if that is the case, I'm going to trade it however I need to trade it. All right, cool. Um, we are still waiting for Mr. Cool. Stewie did pretty well on PALL. That's awesome. And I still remain bullish on PAL. It's just a matter of time. Okay, so we do not have Mr. Bierman coming today. So now I have 13 minutes to fill. And you're going to watch the improvisational skills of one Garrett Baldwin. All right, let's dig a little bit into just what we need to be focusing on when it comes to a stock like VAC. So you have VAC, and now we're trying to figure out how the hell do I trade a stock like this, particularly on this Friday. There's a couple of different ways that I'm going to prepare just on a name that I barely even looked at, but I'm going to give you a little bit of insight on this, right? First off, high beta stock. That's important. That's important. Why does this matter? Well, because when we have these cyclical stock moves, and I've talked quite a bit about Tesla, leading one of the two leading stocks in the S&P 500 cyclicals. I look at WANT. So WANT currently above its 200-day moving average, continuing to chop around, heavily led by Amazon and heavily led by the by what's going on with Tesla. Amazon is your core proxy when it comes to consumer cyclical retail and spending. That's important. We've had strength on Tesla since that move above its 200-day moving average and all three moving averages back here in late May. Why does VAC matter? Because I don't care about anything that this company does. I don't care about its earnings. I don't care about really anything that it, in any capacity. I'm not even buying into their cash flow. What I will show you, though, is that this is a stock that, based on its momentum patterns, can and will sell off when you get into overbought territory. Okay? This. Oh, you want your list of stocks? I got you. So, just real quick, when it comes to this, I just want you to notice MFI, RSI 200-day moving average. You got three specific things right in your face right now. So you might get a little bit of a pop this morning, and that's fine. That's fine. But just be aware that you have seen overbought movement across on RSI and MFI. And then when you are looking to potentially fade this today, shift down to your 30-day minute chart and just start looking at your adjusted levels. We break this line right here. Your next move down can be quick, and it can move down here to around 72. Pay very close attention to the RSI, MFI, MACD, ADX, everything starting to align for a bearish trade in the short term. We're coming to that 200-day. We're coming above RSI. This is looking like an opportunity to go the opposite direction. And again, all you have to do is just keep your stop very, very close. Next question from Leong. What are you looking at for VWAP? Yeah, every single stock has to be assessed on VWAP. And that's important, right? Because if I'm going to try to short this, I don't want to be doing it down here, right? So you have volume weighted average price every single time that you are setting up a short position. It's very important to know exactly where you are in 1 minute volume weighted average price. And where there's a reason for this, because if you psychologically are not prepared for a short-term pop in the stock in the event that algorithms or anyone who's already been shorting the stock goes to cover it, don't do it down here. Don't do it in the third band. Don't do it in the fourth band, definitely. But you might even be a little bit concerned about trying to short it in the second deviation, which is baked into this. I want to be shorting a stock that is setting up like the way that I just talked about up here. I want to know that there's already been some strength there. And if I have the thesis and the conviction to try to take aim at an oversold stock, or overbought stock. You want to be up here. You want to be in a place where you know that people might be taking profits rather than potentially covering their position. Secret Agent Charlie asking about PALL. Um, I was in it at 99. I had said, I mean, this is probably going to peel back a little bit, obviously, given the 20-day moving average. If you're looking for an entry point, you're back here at your 20-day. And the whole thesis, once again, is not based on short term. It's based on this. So at any point, and this, you don't have to have a huge position in this. The key point that I'm just showing you is that you have a lot of things aligning right now on this long-term monthly chart, the ADX switch, the MACD, and you're starting to see volume long term. You're starting to see price improvement. I would love to see the RSI back above 50, but it is what it is. This is going to be a tight stop for me back in at the 90s, and I've laid this out a couple of times. If this does pull back, I'm buying more at 90, and if it pulls back to the lows, which has been in the 80s, I'm back in once again. All right, so that's probably not a bad way to approach that, doing a debit spread. Okay, so the list, boss, the list. All right, so next week, one of the things that we will be giving away, such a nice guy, is the half annual rotation of value, momentum, and Piotrowski. Now, what does this mean, Garrett? Okay, so for a couple of years, what I have been doing is I have been working on a academic approach to looking for ways to invest in stocks that are cheap, that have really good management and very good capital efficiency, and then on top of that, have reversion potential. So, not a you're probably saying, what the hell are you talking about? Okay, well, I'm talking about the fact that there actually are these academic models and these academic approaches to finding things that in the event that there is any short-term reversion to value, these are the names that could potentially go up roughly 30 to 40% in about a month. And we've seen this happen multiple times. We had it happen with some of the shipping names last year. We had it happen the previous year with 2 years ago with SkyWest. SkyWest went from the bottom of the 2022 crisis. We bought in at 17. It went to 110. That's the type of power of this. And what's nice about this is that you're just trading it around the averages. There's not really a whole lot here that you have to do because these stocks are cheap. Right? So price to gram, as I've said, we're looking at 0.8. We look at the F score of at least 7. We look at a market cap of at least 250 million. We're obviously looking for things that have options. And we actually start flipping over rocks in this environment to try to find something to own. But here's what we get. We have a list of 33 names. Okay. And some of these names, you're going to look at me and you're going to say, Garrett, I don't know why the hell you would want to own any of them. I don't disagree with you. I really don't. But there's one last thing that I want to add, and that is a moving average. Now, I don't use the SMA. I prefer to use the EMA because it is more of a momentum driven thing. But I want to give you an example of what the power of this is. Korean Electric Power, ADR. I've written about this stock a couple of times, and I noted this thing was cheap and that momentum was strong and that the gram level was cheap, right? So cheap, strong, F score. I said cheap twice. I apologize. Not that good at improv. And that it was approaching its 20-day EMA. This is what the stock did. It went from 755 to 1450. I don't need options. I know that a lot of people want to own options and they want to trade specific options. I can give you 100 different ways to trade NVIDIA. The question I have for you is, do you only want to do it one way? Or do you want to do it 100 ways? Or do you want to know that there's different things that you could potentially do? With a company like this was just cheap. It was just strong F score, and it broke its 20-day. Oh, and there it goes. Okay, well, what else is there? Well, we missed that one, Garrett. Okay, what else do you got? Well, NC, which no one wanted to touch because who wants to own a company in the lithium and the coal space, except for the fact that anyone paying attention should know that coal and electricity are still in very high demand. There's your move. May 13th, 35 to 41. Mountain Mike, doesn't matter. It doesn't matter where the cash is going. What matters is the price is moving. I don't care. I'm not buying this because I want to own the stock. I'm buying it because I want to trade it above its 20-day moving average. And if it breaks under its 20-day moving average, I have gone from 755 to 1054 in 2 months, and I'm out. That's it. That is the point. And these are cheap companies with various tailwinds. So what's right around the level that we need to be focusing on right now? Okay, Cal-Maine Foods. We're back into the eggs. Do you really want to own eggs? Isn't this the company where somebody stole 500,000 eggs and then sent them a ransom note? You're right here. You're right at your 20-day. You got strong F score. You got a very low gram score, and you're right at your 20-day. I'm looking for something to play in here, somewhere between 98.50 and 105. What else is on that list? CRC, California Resources Group, energy name, right above its 20-day SMA. You got some real estate names. You got shipping names, GNK, Baytex, Granite, Safe Bulkers, Helix. This is stuff that no one wants to touch. It is cheap for a reason. Oh, and there is one of my favorite names when it comes to momentum in the world, Weibo. I don't know what it is about this name, and I don't really care. But I will tell you this. It has a very high F score, which means for some reason, it has a very strong governance score. I know it's a Chinese company. I don't care. What I care about is the fact that their return on invested capital is strong. They've been buying back stock. They've been reducing their debt. They've been achieving everything that the F score is designed to do. But, and this is very important, but every time this gets above its 20 and you just buy it and you just be patient, you're either going to stop out at a relatively 1 or 2% loss, or you're going to get something like this. And we did this back in May. I recommended it when it was at 8:30. And where was the stop out? Up here, 9:30. You can use options. You can buy the stock. You can trade it 100 different ways. You could sell put spreads if you want. The point is cheap, strong, good fundamentals, good quality, and momentum. And that momentum happens above these moving averages. A 14% dividend for eggs. I have a feeling that is going away. So next week on the July 1st, I am going to pull out probably the top 5 or 6 of these names, and we are going to trade them together. If you are in the room with us, 12:30 is typically when I'm on. We're going to talk just about building a small portfolio of these names and looking for safe, conservative types of trades that can lead to these types of moves. Very tight stops, very active management, and show you that there is these part of the world over here that gets ignored. It gets ignored. And all we have to do is just take what the market is giving us. It is 9:20. Brandon Chapman's going to be coming in momentarily. It was great being with Professor Bierman. I really appreciate it. Now I know he has some things that he had to take his daughter to school, and just a little bit of communication misstep. But guys, I also want to just remind you, Ceres in Chicago is serving breakfast from 7 o'clock to 7:30. I really want them to make something that I have called the Teapot Dome Scramble. It is a shot of Drambuie and just a raw egg, and then you sit outside with the guy from CNBC and smoke 2 or 3 Marlboros. That is your Chicago breakfast. Hope you guys have a great day. Brandon will be coming in. Don, I think, is having a little bit of technical difficulties, but just give us a little bit of time on that. I already seen the charts are popping up. All right. Thanks, everybody. Have a good day.